Hi, both. Thanks for joining us today on our Business Gurus channel, where we will be discussing key business topics to help students grasp the most important elements of their course in preparation for their exams and future career. Let's get started.
Welcome to the deep dive. So, you've got a brilliant business idea, maybe sketched out on a napkin, right? But then comes the hard part, figuring out the money side. Where do you even start? What financial goals matter most when you're just, starting out?
Today, we're doing a really focused deep dive into that initial financial roadmap. We're zeroing in on 5 key financial objectives that, according to our sources, every startup needs to nail down early on. Our mission: to unpack this hierarchy quickly and understand why it's structured this way.
And that structure is absolutely critical
Yeah.
because without it, you're just sort of aiming for success in general. Aim is broad, like we want to be profitable, fine. But an objective, that's the specific step. And it needs to be, well, smart.
The SMART criteria: specific, measurable.
Achievable, relevant, time-bound. Exactly. It turns a vague wish into an actual trackable target. That's how you move from idea to operation. These objectives give you that concrete path. Okay, let's get into it. Objective number 1, the absolute baseline: survival. It sounds almost too obvious, doesn't it? Why explicitly list survival first, even before profit? Isn't profit the point?
Well, yes and no. Survival comes first because, frankly, existence precedes everything else. You could have the best profit projections in the world, but if you run out of cash next month.
Game over.
Precisely. Survival is about the immediate short term. Can you pay the bills? Can you make payroll? Can you keep the lights on? It's purely about cash flow and staying solvent right now. Forget optimizing profit margins for a minute. Just don't die.
So it's the foundational layer. Your first SMART goal might literally be don't run out of money in the next 6 months. How do you achieve that, though? What fuels survival?
That brings us directly to Objective B: sales. Survival hinges entirely on getting cash into the business. Sales are the engine that generates that cash flow.
Right.
And what's really interesting here, especially early on, is that the volume of sales often trumps the quality or margin of those sales. You just need revenue coming in.
So you might offer steep discounts or push for deals that aren't super profitable just to get that cash flow moving.
Exactly. It's a means to an end in those early days. That end being survival, Objective A. Let's say you make 10 grand in sales.
Okay.
Maybe your profit margin is only 5%, so that's just $500 profit. Doesn't sound amazing.
Yeah.
But that $10,000 in cash flow, that pays the suppliers,
Yeah.
keeps the website running, buys you another week, another month. It keeps you alive.
Okay, that makes perfect sense. Survival first, fueled by sales. So you stay alive, A, get money coming in. B, what's next on the ladder? Now we get to the one everyone thinks of first. Objective C, profit. Why does this only come third?
Because profit marks a fundamental shift. Survival is defense. Sales are about getting fuel. Profit means the machine is actually working efficiently. It means your revenue isn't just covering costs, it's exceeding them.
So it's the proof the model is sustainable.
Exactly. This is where you move from just staying alive week to week towards actually generating a return on the investment, the time, the effort. It's the first real sign of success, not just endurance. Profit allows for reinvestment, scaling, building something lasting.
Right. So survival proves you can run the machine, maybe on fumes. Profit proves the machine actually generates more than it burns.
Well put.
Okay, moving up the ladder. Objective D is market share. Now this one feels different. It's usually measured as a percentage, not dollars or pounds. Why is gaining market share considered a core financial objective, especially for a startup that's maybe just started turning a profit?
This is where strategy gets really interesting. Market share is a financial play, just a longer-term one. It's about securing future financial health.
How so?
Think economies of scale. Think brand dominance. Think barriers to entry for competitors. Gaining market share, even if it means sacrificing some short-term profit.
Like selling cheaper than competitors for a while.
Exactly. Even taking planned losses sometimes. If doing that lets you capture a significant chunk of the customer base, you're building a platform. A platform that eventually leads to lower customer acquisition costs, more brand loyalty, maybe even pricing power down the road.
So it's a strategic investment. You might accept lower profit, C, for a few years to grab, say, 30% of the market, D, because you believe that 30% will let you generate much higher profits for the next 10 years.
Precisely. Look at how many tech giants or big retailers started. Aggressive expansion, often thin margins or even losses, to build that customer base. That market share becomes the financial asset. It locks in future sales and profitability potential. It's about owning the playing field.
Got it. Survival, sales, profit, market share. That brings us to the final objective, the long game. Objective E, financial security. How is this different from just making a profit? Isn't a profitable company secure?
Not necessarily. Profit is about current performance, like a snapshot. Financial security is about resilience. It's about the company's ability to withstand
Is
shocks,
shocks like a recession or a new competitor?
or a pandemic, or a key supplier going bust. Security means you have buffers, reserves, maybe diversified income streams, low manageable debt. It means the company can take a punch and keep going.
So it's about building a safety net, not just walking the tightrope.
That's a great analogy. It often means being a bit more conservative. Maybe not reinvesting every single penny of profit into risky growth, but building up cash reserves instead. It's about long-term stability over maximizing every short-term return.
And you mentioned before we started that security looks different depending on the type of business, like a private company versus one listed on the stock exchange.
Absolutely. The core idea of stability is the same, but the focus shifts. For a private company, security often means securing the financial future of the owner or the founding family. Liquidity, maybe diversifying personal assets outside the company.
Makes sense.
For a public company, security is more about maintaining investor confidence. Strong credit rating, reliable dividends, enough cash to fund R&D or make acquisitions without constantly needing to issue new stock or take on risky debt. It's about predictability for the market.
Okay. And what about nonprofits? They have financial objectives too.
Right. For a not-for-profit, security means guaranteeing the mission continues. It often looks like building substantial operating reserves, sometimes enough to cover years of expenses so they can keep delivering services even if donations or grants fluctuate wildly. The goal isn't profit, but financial stability is still crucial for survival and impact.
That's a really clear breakdown. Okay, we've covered the 5 core financial objectives: survival, sales, profit, market share, and financial security. Before we wrap up, let's touch on a couple of related ideas mentioned in the source material, balancing these financial goals with other things.
Yeah, that's vital. We focus hard on the financial 5, but you can't achieve them in isolation. Successful businesses have to balance them with non-financial objectives.
Things.
Reputation, product quality, employee morale, customer satisfaction, environmental responsibility. The stuff that doesn't always show up directly on the balance sheet, but absolutely impacts it
Why can't you just ignore those and focus purely on the numbers?
because they're interconnected. You won't maintain market share D for long if your product quality tanks or your reputation is terrible. You won't achieve survival A if your employees are miserable and leave or customers boycott you. The non-financial goals are like guardrails. They keep the financial pursuit sustainable and, frankly, ethical.
Right. And underlying all of this, as you said right at the start, is making these goals concrete.
Yes, back to SMART. These 5 objectives, survival, sales, etc., are categories. They only become useful when you define them with specific, measurable, achievable, relevant, time-bound targets.
So not just increase sales, but
Increase online sales by 15% in the next quarter by implementing a new targeted ad campaign. That's something you can actually work towards and measure. Without that SMART structure, these objectives are just good intentions.
okay, this has been incredibly clarifying. We've walked through that hierarchy: survival, sales, profit, market share, and financial security. I think the big takeaway for anyone listening, especially if you're starting something, is understanding this order. Don't obsess over market share on day one if you haven't figured out how to survive month one. It tells you where to focus your energy.
Exactly. And maybe a final thought to leave you with. Consider this. If survival and sales are the bedrock for everything else, does a business ever truly stop focusing on survival? Or does survival just change shape as the company grows? Think about huge corporations making cuts during a downturn. Isn't that just objective as survival playing out on a massive scale? It makes you think about how these objectives aren't always sequential, but might constantly interact and shift in importance depending on what's happening. Something to ponder.
Definitely food for thought. A great place to end this deep dive. Thanks for joining us. We'll catch you next time.
Thanks to both of you for joining us today. You've been listening to the Business Gurus. Let's now hand it over to you. What further questions do you have based on what we've discussed so far? Leave a comment and we'll get back to you right away. If you haven't already, hit that follow for more business tips.